Good morning, Mr. Tarun. How are you doing? Good morning. I hope you slept well and that you have a beautiful day. Starting with this. This is gonna be a beautiful day, right? Because we have Thinker's Frequency. So I'm just live on LinkedIn, and now I'm live on YouTube, and I am just gonna send this to people on WhatsApp. One second. '60-second episode. No negative news. This I learned from one of the viewers of Thinker's Frequency. He said, Nishant, please don't start the day with bad news. You know, please always start the day with the good news. And I'm like, that's good advice. That was something my brother told me in the initial phases. He said, just be sure to not share the bad news too much. And I'm like, that's that's very well said, right? So no bad news here, or at least not purposefully, unless it's very important. So I have sent this to people on WhatsApp. I've sent this to people on LinkedIn, on YouTube. How's my tinnitus? So my tinnitus is very good. That means I'm very good. My tinnitus is bad. My tinnitus is no longer a problem. However, what happened was I started drinking coffee because Sumanna sir sent me coffee, right? The beautiful humble bean coffee. Now that coffee was great. That coffee was amazing. It was beautiful. It smelled nice. It tasted really nice. But somehow it just blew up my left ear and it started ringing a lot because caffeine is heavy on tinnitus, right? So I just forgot that I had a tinnitus problem. And when I started drinking that black coffee, uh, my ears suddenly heated up and it became a bit of a problem. So now for a few days, I've stopped drinking coffee altogether and now I'm feeling better. So no problem with tinnitus per se, but unfortunately, due to that problem, I'm not being able to drink the beautiful humble bean coffee, which is sad. But it was really nice. The coffee was great. It's just that my medical condition doesn't allow it, right? So that is something about the coffee. I'm sorry, about the tinnitus. And I guess you can hear me properly, so I should begin. I'll just check LinkedIn. Uh, my ears suddenly heated up and yeah, so I am audible on LinkedIn as well, which means we should begin the show that we deserve. The show that we deserve. We deserve it, right? It's that good. So take your front seats, let your comments rolling. You all are looking really pretty. And let's begin. Bum 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 bum. Bum 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 bum. Good morning, everybody. Welcome to Thinker's Frequency. We're having such a good time. This is the peak of human civilization. We are working so hard, doing such good work for ourselves, our parents, our kids, our siblings, our husbands, our wives, our friends, everybody. Well, not other people's husbands and wives, I hope. And just when we thought things could get any better, like they couldn't possibly get any better, well, they just did. Call it divine intervention, folks, but things just got a whole lot better. Now we have Thinker's Frequency, a daily mental workout, a daily dose of insights and analysis which don't lead to paralysis right before we punch in. So let's continue with our journey of reading between the lines, things that are especially interesting and important in the world of business and finance. Let's go. Oh, but before we go, we've got to follow tradition, right? You know the tradition. The sweet and sacred tradition of the simultaneous sip. We'll all sip something together and it'll bring us good luck, as it always does. Doesn't it? Don't you feel lucky after the simultaneous sip? And all you need for the simultaneous sip is a copper mug or glass, a tank, a chalice or stein, a canteen jug, a flask, or a vessel of any kind. Pour it with your favorite liquid. Today I'm having green tea with some black pepper in it. And here we go. Oh my god. I also added some tulsi in it today. Beautiful. Sublime. You know what the simultaneous sip says, right? You know what it says? It says that you are not alone. It says that we're in this together. And that's such a beautiful thing to say. With that out of the way, let's go. So it seems like the US Treasury Secretary is also watching Thinker's Frequency. Because you know what the statement he made just yesterday? He said that CAPEX is a great economic indicator. CAPEX is a brilliant economic indicator. And US CAPEX is up. And that's what we've been talking about at Thinker's Frequency, right? That how great an economic indicator CAPEX is. Because CAPEX determines new jobs, CAPEX determines new employment opportunities, new investments by private companies. CAPEX also determines the confidence in corporations about the economy, about the demand, about everything as far as the country is considered. That's why they invest. If you're a company and if you want to invest, you'll only invest if you see some return, right? So CAPEX is a great economic indicator, right? And the US Treasury Secretary actually said the same thing. And he said US CAPEX is up, which is a very good sign that the economy is doing very well. So that's that's validation. Speaking of that validation, ITC has decided to announce a 20,000 crore capex over the next 5 years, so roughly 4,000 a year kind of a play. And ITC, if you are not aware, I'm sure you are though, it's a conglomerate. It's India's largest cigarette maker, but it's also a very leading FMCG company. So FMCG companies investing in the future is a great news. And Mr. Puri, I guess that's his name, he said that there is general optimism as far as the country is considered, the macroeconomic stability is considered. Yes, there are some price pressures, but inflation is in control. There are some price pressures generally, input pricing, but overall, it's a good play. And we are looking at supporting the India story. There comes the 20,000 crores. So ITC investing 20,000 crores is a great news for the India story and as a general signal. And as they say, the first one is the hardest. So in FMCG, there's been a long time that a major investment has been announced in the new space. Yes, there have been a lot of deals, there have been a lot of mergers and acquisitions, but not private capex per se. So if this becomes a signal to the rest of the industry, you might see some really good news. Because let's say if you invest in AI, okay, data centers and so on and so forth, or you invest in FMCG, or you invest in retail, where do you think more jobs are gonna get created, right? More jobs are always created on the bottom of the pyramid, at the bottom of the pyramid. So FMCG investing in capex or something happening with, let's say, fisheries or agriculture and so on and so forth, they create a lot of jobs, which leads to a lot of boost as far as the rural economy is considered. So ITC announcing a 20,000 crore capex is great news. And America, by the way, is also talking about new capex, which is great news for America. So these two things considered, A very weird thing has been happening. Viewers of Thinkers Frequency would know that Google's AI overview, Google's AI overview is actually summarizes it. Basically, summarizes everything that the links have. They scrapes the link, and then you don't have to go to the link altogether, right? So a lot of people were concerned about what happens to the links, what happens to the publications who publish all those reports, which are just scraped through the summary, and how many people would actually go to the backlinks, right? Uh, Good morning, Nishant. You're not alone. Thank you, Mr. Shamir. So there were concerns about how many people would actually click on the link, right? Uh, Now it's out. It's 80% of people who do not click on the link. 80% of people are just happy with a superficial and often incomplete and incoherent overview of the information that was given. Now, how many of you are surprised at this? Is anybody surprised that 80% of people actually don't go beyond the AI summary generated by Google? Right? Is anybody surprised? People on LinkedIn, people on YouTube, are you surprised? I guess you're not. Nobody should be surprised that only 1 out of 5 people are curious enough to actually go beyond the link. But here's the problem. Now, viewers of Thinkers Frequency would know. The problem is this is a way to kill all information, to basically just kill all information. How do you kill all information? You kill all information by removing the incentives for that information to be born. Okay. Now, what do I mean by that? Is that when you start a media company, or let's say when you're just blogging, why would you blog, right? You would blog, or you'd write reports, or you'd publish research, or you'd collect information, you'd share knowledge in form of text. Why would you do that? You'd do that only if you know that you're gonna have an audience who's going to read it. Okay. And once that audience, that traction, that traffic comes to your site, it's gonna lead to some money. Okay. That's the incentives. Follow the incentives, follow the money, and you can predict the future down to the right second of it, right? So what happens when Google, which is essentially all of the internet except for social networking, decides to reduce your traffic by 80%? Two things happen. You pivot your way, you find out different ways of finding traffic. You're so big that you don't need Google. You have different ways of distribution. You have subscriptions and so on and so forth. And third, the second way is that you just die. You don't stop doing that altogether. Which is most likely for 90% of publishers? For 90% of people, what is more likely? Do you think that they'd have different ways to distribute their written research, their blogs, their information, their reports, their articles beyond Google? Do you think that's possible? Because if you are a news company and suddenly people don't come to your website, instead they just read an outline on Google, why would you build a news company? Why would you build a news company? So Google might have found out a way to essentially kill all information. Now, this was just level 2. We've discussed this. This was level 2. Level 3 is what happens when these people die. What happens when these media companies start closing down? What happens then? Where does the new information come from? If people don't have the incentive of putting out new information, who does this work and why? That is a very good question. That is a very good question. So, a lot of consolidation will be coming in the media space. Consolidation is when mergers and acquisitions will start happening and so on. That's going to happen in the media space. Nobody should be surprised. However, till that happens, you're gonna see some sort of real flux as far as this space in general is considered, right? So Google might have found out a way to kill new information, which is huge, which is huge. Now, people often say that, hey, you should write a book, right? You should write a book or something. Now, the question is, why would you write a book? Why would you write a book? Because even with books, what happens is that people would go to AI and they'll say, hey, why don't you tell me what people are thinking about this book? And AI will sort of give you a summary, and 4 out of 5 people would not be interested in going beyond that summary. So, what happens to your book? It doesn't sell, right? And if you know that your book won't sell, would you still write it? That's a very good question. Mr. Tarun has a few comments, but the thing is, you can't blame Google as they are a web search company not hosting them. Everything will be behind paywall, or as Cloudflare has shown, their new product which will block the AI bots. Mr. Tarun, I would differ with you, beg to differ. The problem is, without distribution, the paywall doesn't make sense. Okay? If you do not have distribution, who will convert? Paywall is a funnel concept that you get 100 visitors on your website, 5 of them, 10 of them actually pay, or 1 of them actually pay realistically, right? Why would people pay for something, right? With paywall, what you're suggesting, that's what I covered, that only few companies, very few companies who would survive, who are so important, they will be bringing in paywalls so that you won't, they would survive, right? I'm talking about everybody else. Everybody else. So, not everybody will be in a position to actually leverage a paywall, for users. So, very, very huge, right? This is huge. This is obviously very huge. Let's move on from the story. It is something big. We can keep talking about it, but we've already talked about it for like 15 minutes. Viewers of Thinkers Frequency would remember that we talked about TikTok being looked at for sale. So US was in a conundrum that they wanted to ban TikTok, or the second option was to buy TikTok and have it bought by a US company so that it could still run. Because there's a lot of economic value of TikTok, and there's also a lot of social value of TikTok. But TikTok is like a Trojan horse, is like Helen of Troy. When TikTok comes, it infests your youth, it neutralizes them, so to speak, in strategic terms, and then your country is basically dead because your youth is addicted to TikTok. It's not doing anything, but still it has a lot of social value and it has a lot of economic value. But that Trojan horse aspect could be removed if TikTok could be sold to an US company, and if it could be sold, that all that value could be preserved, and that social negative aspect which I talked about could be dealt with. The algorithms could be changed to promote a certain kind of content which is more productive. So that was the goal of Trump administration. They didn't want TikTok to get banned, but they wanted TikTok to get sold. However, China didn't want TikTok to sell, and it seems like China has said no to TikTok sale. Now, ideally, there should be just one outcome of this. That is, TikTok gets banned in US, right? So TikTok is already banned in India. TikTok getting banned in US will be like a pretty big blow for the TikTok play. However, what's to be noted is that Chinese, trade deal with America is yet to be signed. Now, the question is, why would China allow TikTok sale or deal outside the trade deal? It's a leverage point, right? So it would use TikTok as a leverage to get a better trade deal. So this is not the end of this conversation. Let's remember that something is going to change as far as TikTok deal is considered as an overall deal with United States for the trade thing. Moving on. Nuclear industry is going on a very big you know, uh, it's getting a fillip. So there's something called fourth generation reactors, third generation reactors, second generation reactors. At this moment, the biggest problem with nuclear fallouts, nuclear reactors, and nuclear energy in general is the tail risk of a fallout, right? Now, what happens if that reactor goes out of control and it blows everything up, like it happened in Fukushima, right, in Japan? So that triggered a lot of nuclear shutdowns across the globe. Germany shut its nuclear power plants down after that happened. Uh, Not a wise decision, but that happened, right? So fourth generation nuclear power plants, which might just take a lot of time to build, but they are in progress in US. They don't have that risk of fallout. So nuclear energy, essentially, the next generation of nuclear energy, is devoid of the risk of nuclear fallout. Now, what does this mean for you know for the energy play in general? What does this mean for the energy density or energy supply? It means good news. It means good news, which is good news for AI, which is essentially what we talked about. That the energy paradigm right now, as far as AI is considered, is talking about lack of supply, right? Lack of, let's say, energy is the laggard, AI is the frontier. So energy play is going to catch up with AI, right? But two things are going to happen. Viewers of Thinkers Frequency would know that energy will sort of catch up, and AI's requirement of energy because of efficiency of chips going up, as it always happens, Moore's law, is gonna go down. So as AI's energy requirement goes down and new energy supply goes up, we'll suddenly see a very big deflationary pressure on energy, which is sort of a very interesting phenomena. Energy becoming cheap overall. Now you might say that none of this is possible. This can't happen. This is too much of a stretch, and your predictions are way into the future. No, it's not like that. Similar situation happened with steel. So how, you ask? Steel is running at an overcapacity play, right? No country wants to shut down their steel plants, but essentially, if you look at the global steel supply, it is an overcapacity situation, and countries have been preserving their steel manufacturing just by avoiding China. So China has created more steel, or creates more steel, than the rest of the world combined. Did you know that? Did you know that China creates more steel than the rest of the world combined? Now, what happened was, with this boom of steel from China, essentially steel had a deflationary, uh, you know, issue. That steel became very cheap. Now, if it was a free market, Chinese steel would just supply the rest of the world, and the entire world could just shut down their plants and be reliant on Chinese steel. But that will be anti-dumping duty. That would be very bad for the economy, right? Because without steel manufacturing of your own, it's a bit of a problem, right? It's a very big problem. You lose a lot of jobs and so on and so forth. Your industry gets killed. So that anti-dumping duty is preventing a lot of home markets from an oversupply of steel, or let's say a cheap supply of steel. Something similar is going to be happening with energy, is what I predict. Now, Mr. Tiwari is not here, but one of our regular viewers of Thinkers Frequency, I'm not sure if he's here, he's not commented, but he said that, Nishant, you talk about not using analogies and analogies being bad for thinking. Now, I'm not talking in analogy terms right now. What I'm talking is first principles, you know, demand going up exponentially, energy supply going up exponentially, but suddenly you hit a cap on energy demand and it goes down, and energy supply still stays intact because you can't shut down the plants all of a sudden, and then the energy becomes a deflation. This is first principles thinking. However, what I'm saying is that we've seen this movie before. So, very interesting. Uh, Moving on. How did you like that, by the way? Did you uh, Did you enjoy that? The beauty is like, question is how do you actually predict things, right? Now, Mr. Tarun has a very good question. What if there is new tech development that will need more energy? Now, that's a phenomenal question, actually. That's just remarkably beautiful question. This prediction essentially uh, assumes uh, that there's no new tech development that requires as much energy as, let's say, AI, or let's say blockchain, or so on and so forth. So yes, of course, if new tech developments happen which require just as much as energy, right, uh, the things will be same. However, in the current scenario, this particular thing stands. Very, very good question. Great, beautiful question. Now, moving on. Now, this is thinker's frequency, right? This is like, this is mental workout. This is good. This is absolutely amazing. Speaking of amazing, how amazing is that in the morning we get to discuss such great things, and such nice, things, and we predict. And some of these predictions, my friend told me that if you are so good at, if you're proving to be good at predicting things and so on and so forth, why don't you translate that intelligence, or let's say that insight, foresight, into making money for yourself, right? It should lead to money. Now, she's like a very brass tacks kind of a person, and she's very intelligent. So she says, why don't you just change it? Or let's say use this intelligence to make money. Now, uh, viewers of Thinkers Frequency would remember how we talked about the IT sector and banking sector going to face pressures in times to come. And you could go back 10 episodes, and I said the IT and banking sectors and other sectors which might just post lackluster quarterly results will bring the stock market down a little, right? We talked about it. And what we did was essentially we just took the money out. And now what we are seeing is the news which says Dalal Street slide continues for fourth week. So this is the 62nd episode. You can go back to the first 10, 20 episodes, and we talked about how this particular reign, the heating up of the market, the VIX market, the every indicator was up, right? The government indicator, inflation was down, rate cuts were happening, uh, VIX indicator was down, everything was down. And it's like market is looking hot right now. But with the quarterly earnings coming in, we talked about how those quarterly earnings could just be playing a dampener to the entire market segment sentiment. And when that sentiment sort of turns negative, market goes down a little. And we didn't end up losing money. So people in this play. So this is great, right? This is beautiful. The only problem with Thinker's Frequency is because we discuss such niche things, such, let's say, I don't want to be aggrandizing, but such niche things, let's say, it's never going to be a very popular exercise, because we're not just giving stock tips, and we're not just discussing politics or something popular. We're going to be always a very, very niche kind of a play. So that's a bit of a problem, which sort of shows, right? At this moment, we have like 12 people in total, LinkedIn and YouTube, and that's how it's going to be, right? But good for those 12 people, right? Ahead of the curve. Moving on, UK and Indian trade deal has done well. We've talked about that a lot. Speaking of trade deals, nothing has come out of Mr. Jaishankar's meet with Mr. Wang, his counterpart in China, because the rare earth supply crunch is hitting the component manufacturing companies now. The component electronics component manufacturing, the printed circuit board guys, and it's hit them. And they're saying that we might not just be able to use the PLI scheme, because we might not be able to produce without the rare earth. Now, rare earth has proved to be kind of a chicken neck situation. With just rare earth, Mr. Raju Kumar says, insights from Thinker's Frequency so far have been truly beautiful, deep, and reflective. Whoa, thank you so much, Mr. Raju. Thank you so much, Mr. Kumar. So sweet of you. And that's the goal, right? That's the goal. That's why we wake up early. So, uh, the rare earth situation has been such a chicken neck for the Indian economy that we have been looking at nothing, no solution as far as that is considered. Now, look at this. The total import of rare earth was just 300 crores. Just 300 crores. It's insignificant amount of money. Insignificant amount of money, right? And that particular import, just that particular import, has stopped the EV manufacturing. It's troubled the EV player, it's troubled the electronics player, it's troubled the speaker industry, and it's now looking at troubling the component manufacturing industry. You know, these people. So this is hitting, and as far as Mr. Jaishankar is considered, no good news on that. So can we say, is it good that we say? Is it the right time to announce or just say it that maybe Mr. Shankar's meet with Mr. Wang was a complete failure? Can we say that? Can we say that? That's a very good question, right? That's a very good question. Can we say that Mr. Jaishankar's meet with Mr. Wang was an absolute and utter failure? Right? Some comments. Actually, you talked about MiG-21 going out of duty, and that must stall deterrence for this trade deal, as China has been very passive very active in airspace. Uh, yeah, definitely. I don't. Yeah, so are you talking about rare earth minerals? Because definitely, rare earth minerals have been blocked by China because they had defense implications. So you're totally right about that. Moving on, Dixon's Dragon deal. Dixon was getting into a joint venture with two Chinese companies, Kunshan and Shuangwang something. I always butcher their pronunciation. Sorry about that. A lot of other companies are also looking at something like that. Since government allowed 24% of Chinese investment into these companies, FDI approval signals thaw in government stance in allowing Chinese companies access to India. So this is a trade relief. Indian companies have been pushing for this, and other companies like EPAC Durable, PG Electroplast, Amber Carbon are expected to forge similar joint venture deals like Dixon. Moving on from Dixon, India and Maldives. Maldives. Is it Maldives or is it Maldives? Let's say Maldives because it sounds more urban. So Maldives is getting some support from India. India is pledging a credit of 565 million, $500 million, and it's also going easy on the debt collection. Uh, Viewers of Thinkers Frequency would know that India's marine industry is a very important, strategically important play. Shares like Mascon, Garden Reach, Cochin Shipyard, and so on and so forth. Very important. Strategically, defense-wise, Indian maritime, industry, shipbuilding industry is very important. And Maldives is a very important player as far as that whole Indian waters are considered, right? The scene of Indian waters. India and Maldives had a very tough relationship recently because the current Prime Minister of Maldives, or President, he was not very pro-India, right? And because he wasn't pro-India, there were a lot of rhetorical and strategic moves against India from this particular leader. Now, what happened was, if you remember, Modi ji went to Lakshadweep and signaled Lakshadweep as an alternative of Maldives, for Indian travelers, because Maldives still gets most of its travelers from India, and Maldives is essentially a tourism dependent economy. It seems like that leverage, or let's say that arm twisting, or that strategic maneuver has helped, and now Maldives and Indian relationship is looking a little better than before. It's basically getting sorted. Moving on. Banking license for companies not on cards, says RBI governor. Now, viewers of Thinkers Frequency would remember how I talked about, Mr. Bharti, Sunil Bharti Mittal, talking about not having enough. The only regret of him being that he couldn't diversify the Airtel empire in any place outside telecom. You remember we talked about how Airtel couldn't really go beyond telecom. It stuck to telecom, and basically everything it did just remained in telecom. It tried something in FMCG, Delmo, didn't work. It tried something here and there, didn't work. And everything it could do was just in telecom, and that was pointed out as a regret by Mr. Sunil Bharti Mittal. And then a viewer of Thinkers Frequency said that Airtel banking play, Airtel Payments Bank, is probably a diversification move. Now, it was supposed to be a diversification move. Airtel wanted to get into banking. However, Airtel Payments Bank is not a full-fledged bank. It allows deposits up to 2 lakh, doesn't lend, and so on. It was hoping that someday, RBI would allow, banking license to players like Airtel Payments Bank. But RBI has said that that's not on cards. Why? Because there's an inherent conflict of interest when a corporate with diversified interest gets into banking, right? And if it's a major shareholder and it's handling depositor money and it's handling, let's say, lending money, and if it lends to its own entities, it becomes a conflict of interest kind of a situation. So perhaps Airtel Payments Bank will not become a real bank anytime soon. Moving on. Gloom lift, India Inc. ready to add more to celebration. This country, our beautiful country, is very, very dependent on what happens as far as this particular festive season is considered. It's very important for all of us because this festive season will decide what happens, as far as a lot of things are considered: jobs, private capex, and so on and so forth, domestic consumption. Now, companies are really looking at this particular season starting next month, Raksha Bandhan, and so on and so forth, for ad campaigns. So, ad marketing spend. Let's hope that this particular season, festive season, doesn't turn out to be a dampener like last year. So, that said, let's move on. A lot of political chit chat. We shouldn't discuss about it, but I have a funny thing, and I won't say who said this, right? And you can guess who said this, but I won't say because I don't want to attract any political, controversy. Somebody said this quote: "OBC's real productive force, but they're not aware of their own strength." OBC's real productive force, but they're not aware of their own strength. Now, that's something that nobody should say. Nobody should say that. It doesn't sound good at all. However, somebody said this, and you can guess who. Moving on. More realtors are landing in Mumbai for the real estate story. So, DLF, people from all over India are moving in Mumbai for real estate action. Why? What is the draw as far as Mumbai is considered? A lot of it has to do with slum redevelopment. So that's very interesting because we know that there's a $20 billion project, or is it $1 billion? What's the size of Adani's Dharavi project? The cost of Adani Dharavi redevelopment project. One second. Adani Dharavi redevelopment project cost. So yeah, it's a 1 lakh crore project, So looking at that, there's also a new development as far as other slum area developments are considered. So Mumbai might just be getting a real estate lift. However, Mumbai's real estate has a lot of problems. Some systemic problems remain. But despite those problems, a lot of realtors are looking at going in. Now, one thing that we talked about in at viewers of Thinkers Frequency would remember that we talked about how front loading happens, right? A lot of front loading happens because of tariff issues, because of what's going to happen in the future. A lot of front loading is a good strategy for companies to navigate those waters. Turns out that front loading didn't really work out for Puma. Puma, the German apparel company, the footwear company. So it did a lot of front loading to avoid the tariff troubles. However, all that load didn't sell. So you bought things in anticipation just to avoid troubles, and that was a good strategic decision at that point. But you sort of overestimated how much you're gonna sell, right? And that sort of led to Puma's troubled situation. It has oversupplied. So what happens with front loading is that it's a good strategy, right? But if you have an oversupply of inventory, it goes on discounted rates. So you've got to have discounting happening. Price discounting is the natural consequence of overstocking of inventory, right? So if you're overstocked and you do a price discount, profitability goes down, and even absolute revenue numbers go down, because there's only so much you can sell, right? There's an upper limit to the market share and all, the market potential. Puma is in trouble because of these issues. It's gonna be looking bad as a stock. It's gonna post lesser revenue numbers and so on and so forth. So moving on, that's a very interesting play, I think. Uh, a lot of action is happening as far as the weight loss drug is considered. Some new reports coming on from UK about potential blindness becoming a real deal. Now, viewers of Thinkers Frequency would know, amongst the first few episodes, we said absence of evidence is not evidence of absence. And the way to make a drug seem safe is very, very gray ethically. So, how you can make a drug seem safe is that you measure its effects for a shorter period of time till the bad effects don't start showing, right? So that's what these companies started doing. So let's say if the bad effects of your drug will take 2 years or 3 years to manifest, what you do is you stop your study at the first year itself. Your drug seems safe, but then it starts showing its errors, and by then you're out in the market, right? So something like that is happening in UK. Vision losses are happening for people who've taken that drug. So we talked about a lot of this, and no point going too far with this, but you know where this is going, right? This was an unsafe experiment, and now it's gonna land in India. And these people are so strong that it's gonna be a bit of a problem. But just remember where you heard this first. Uh, EU has approved Eli Lilly's Alzheimer's drug. So this drug, Alzheimer's drug, was causing some brain swelling, but after further reclarification, they've approved that work. All power to them if this particular thing solves Alzheimer's. Very, very sad disease. Uh, Hope everybody gets okay who's dealing with that. Moving on. A lot of news on the UK and India trade deal. Well, we've covered a lot of that, so we won't repeat ourselves. However, what's to be noted is that this particular deal is just extraordinary for India. And while the actual size of the deal is not significant, because right now India and UK trade relationship is at $50 billion. $50 billion is a very, very small percentage of the Indian GDP. And let's say even if it goes to $100 billion, it's still a small part of Indian GDP. But as a signal, it is a beautiful signal. It might just essentially create good news for India as far as other trade negotiations are considered. Speaking of trade negotiations, what this deal has introduced which will be a great news, is export of Indian nurses and Indian professionals to UK. Better earning opportunities for them, and bad news for Indian home market as far as healthcare is considered, because we need those nurses, right? However, with the effort on skill development, we might just be looking at filling that shortfall, because Indian nurses in India don't make a lot of money, unfortunately. So it's very good news for them that they have better prospects of going to UK and making a living, right? We discussed this. Viewers of Thinkers Frequency would remember an Indian nurse on an average makes like 3 to 5 lakh rupees a year in India, but they make up to 40 lakh rupees, 50 lakh rupees in UK. So that's why they go there. They want to go there. Moving on. Great stuff being discussed, right? Mm-hmm. Electronic parts companies face rare earth crisis. We discussed that. 25 OTT platforms blocked for obscene content, says INB Ministry. Well, that is that's obviously a good thing that you're blocking something obscene and vulgar and whatever. But I wrote a post about it yesterday, that this heavy handedness on small players is something that sort of irks me, because very similar stuff is going on in Netflix. We've talked about this before, so we won't repeat ourselves, and other players, but there's no moves on them. They're running on self certification. So are these guys. But these people are getting banned while those guys are going scot free. Now, I'd like ideally to have no censorship at all, not on TV, not anywhere, right? No censorship, right? And I'm anti pornography. Ban the pornography, absolutely 100%, as you've banned it, and you just should ban it. Pornography is bad business. But as far as this play is considered, either it should be a very level playing field is very important as far as the entertainment industry is considered, because banning a few players who are literally small players, right, is really not the way to go. A better way would have been to actually ban the shows which are problematic instead of banning apps altogether, right? That shows there's regulatory overreach and essentially bullying of small players. That's what I believe. This is a contrarian view, you know, but that's what I think. Mr. Tarun says, who has big money, deep pockets, can almost always avoid any action. You're 100% right. It's just that case, right? Why would otherwise the government not look at, you know, slapping Netflix and other players for hosting similar content, right? Now, I'm not against adult, I don't have a problem with cinema with explicit content, you know. I've watched a lot of global cinema. I'm a huge movie buff. Sometimes it's necessary. I understand. It's okay. It's fine. What I don't understand are double standards. And that's what I wrote on LinkedIn yesterday, and on Substack. Didn't go anywhere. Moving on. Experts flag UK India FTA over patent terms, access to drug. There are fears the deal may weaken compulsory licensing, impact affordability. Well, that's okay. Netflix can play court fee for century and still there'll be no action. Correcto. Just as what happened with Google, right? Even with the Competition uh, Council of India, is it CCI full form? CCI full form. Competition Commission of India. So yesterday, my brother pointed out that I misspoke CCI as Competition Council of India when it's actually Competition Commission of India. So Competition Commission of India had slapped 1,000 crore fine on Google, and that case is still on. They went to NCLAT. They, agreed with CCI's decision. Then they are now going to Supreme Court, and I don't know when they'll actually pay the fine. So you're right. Moving on. Very interestingly, very funnily, if you want to start a crypto platform or something, you need a fit and proper exchange certificate from your competitors. So people existing in the crypto business will give you fit and proper certificate, and only then you can start. Now this is an absolutely badly written regulation by Indian babus. So this will obviously get corrected, but you can just imagine the person who wrote this, right? Okay, so I'm writing a regulation. I want to regulate the crypto play without actually regulating it, without actually SEBI doing it or something like an RBI doing a crypto regulation. Can't involve those guys, but I have to do something like a self certification. What can I do? What can I do? I'll just ask its competitors, a new player's competitors, or people who are already existing in that industry, to give these people a fit and proper certificate. Yeah, that sounds good to me. Well, that sounds brilliant. Yeah, going in. And he just literally wrote that as, as the comment order. That Babu. Oh my god. Unbelievable. Obviously, this is gonna get changed. How it's gonna get changed? Let's predict a better way to do it. A better way to do it would be that you would ask these crypto players to actually form an association with a real checks and balance in place, and that association would be responsible for self certification of these players, not the competitors. Just like happens with OTT players, just like happens everywhere, right? Uh, Maybe Trump reached out to them and said, make crypto great again in India. No, 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 this is something different. But yeah, moving on. RBI's variable repo rate auction oversubscribed. We talked about this. RBI has been successfully able to suck out the liquidity out of the system. Earlier, the weighted average call rates, which is basically banks storing money in each other for an interest rate, were more popular because they were giving better interest rates. However, those interest rates fell, and suddenly RBI's VRRR auctions seemed lucrative. It's a temporary way of sucking liquidity out of the system, because liquidity, overtly liquid system and an under liquid system is bad for banking. So this is something that most people don't understand, but it's good. Mr. Rajakumar says, are these OTT platforms being banned because they're cheaper and give wider access than players like Netflix? No. That is a thought, interesting thought, Mr. Kumar. But, oh, so you are saying that maybe Netflix and big players lobbied the Indian government to get these players banned? Is that what you're saying? That's possible. But no, they were actually pushing the envelope. They were actually going really bad with their content, right? Real pornography kind of a thing, semi-porn. These people were going the semi-porn way. Ekta Kapoor production, it was Alt Balaji or something. They were literally going in a semi-porn way. So many of their demons are self-inflicted. Can't say that. Can't absolve them of their sins. However, interesting aspect, that did bigger companies say that these people are taking revenue away, and look at their content, they're taking revenues away from us, and maybe that's the reason why these people were banned. Could make sense. Now Mr. Tarun says small platforms are actually more leaning towards 18 plus content. Can you guess why? These small platforms are going towards 80%, 18% content? Can you guess why? Just take a second, I'll take a sip. And please write, why do you think these people are going towards that? It is the money-making genre, says Mr. Tarun. You're right. Because this is the only place that these people have been able to make money, the streaming guys. OnlyFans type of subscriptions and adult entertainment. These are the only two places where these people have been making money. So Disney, Hotstar didn't work in India. Either it's cricket that makes money, streaming rights of that, or it's just this adult content. So Ullu had a revenue of 100 crores and a net profit of 20 crores. So Ullu was making money, right? So filth, there's a lot of money in filth. We've discussed this. Viewers of Thinkers Frequency would remember how we've discussed. Moving on. I hope I'm not missing out anything. Mm-hmm. Mm-hmm. No, no, I'm not. I'm not. Yields on 10-year GSEC jump post governor's remark on stability. So, uh, and in any form too, there are like movies where 18 plus is the most money making genre in web novel publishing. You're right there as well. Uh, Web novel, just writing, adult writing is quite profitable. Yeah, and it also gets a lot of views. So, with the thinning hopes of rate cut in August, traders were not keen to hold security. So traders are not really keen on holding on the GSEC. Its yields have, you know, jumped, and because what they are looking at is that RBI is saying that we might not be looking at another rate cut to follow, because even though inflation is at 2.1%, the rate cut might or might not happen. There is some sort of ambiguity there, due to which the yields of the 10-year benchmark government security has spiked 6 bps basis points. So this is that. Cooling retain inflation. Inflation is something very important. Meta is stopping the ads, political ads, due to regulation. Producing good content is hard and time consuming work, says Mr. Rajakumar. And you're right. Doing the hard thing is always hard. And doing the hard thing always leads to difficult ways of making money. There's a lot of money, easy money in filth. That's how we see all the betting apps in India making so much of money. The biggest success story that has come out of the Indian startup ecosystem is in the betting play, right? Dream 11, Games 24/7, and all of these are just gambling apps essentially, right? Probo, and so on and so forth. So it is always that market always works, and good products, or let's say well-meaning products, have a hard time raising money. But raising money or just making money in general. But that shouldn't stop us from trying our best. And with that, we should come to the end of the 62nd episode of Thinker's Frequency. I hope you had a lot of fun. I certainly had a lot of fun. Thanks to Mr. Tarun, Mr. Kumar, and Mr. Shamir. I'm sorry, I didn't take your last name. Mr. Shamir Kunnat Pidikail. Kunnat Pidikail. I hope I'm pronouncing it right. It was lovely talking to you all. I hope you had a great time. This brings us to an end of the episode, our daily mental workout, our daily dose of insights and analysis which don't lead to paralysis right before we punch in. And it's 9:03. We're gonna punch in. I wish you a beautiful day, personally and professionally, and I'll see you tomorrow. Same place, same time, hopefully. Bye-bye.